Guys, welcome back to my YouTube channel IP Boys FX. It's your boy Daniel. I know that some people find it so difficult when it comes to analyzing their higher time frame trend. Like new traders, they find it so difficult when it comes to analyzing your higher time frame. So today on this video, I'll teach you guys 3 good steps on procedure on how you analyze your higher time frame trend. So easy and simple. So let's get to the main tutorial on this video. So the first steps, once you come to your higher time frame, because I normally analyze my higher time frame on D1, that's when I find out my structure and other things. So the number one thing you want to consider is to know where your higher highs and your higher low is on the trend. You understand? Once you find out where your higher high and your higher low trend is, that's when you consider anything on trend. So let's get to it. So you need to bring out your parts. You need to know where your higher highs. This is your previous high. This is your previous high. Then you need to draw it from your low. This is your previous high. This is your lower low. Here is your lower low, and here is your lower high. Another lower low, and here is your lower high. I will tell you guys why I'm drawing this and the reason why I'm drawing this like this. And this is your previous low, the last low that broke, and this is your lower high. And here is your another lower low, and here is your lower high. And then this is the last low that the recent last low that the market has created, which is around this zone, which you guys can see. We are currently in a range on Euro USD. So the first step, higher time frame structure break. I'll teach you how to indicate your higher time frame structural break. So on your higher time frame structural break, this is the number one thing you need to consider once the market is moving. Once you come to your weekly time frame or your daily time frame, because new traders normally analyze, they find it so easy to analyze in 5 minutes time frame, 15 minutes time frame. But once it comes to day one, daily time frame, weekly time frame, they'll find it so difficult to analyze it. So on this trade, I'll break it down so that you guys gonna understand it. So what you need to draw is you bring out your trend line. And another tips I'm gonna give you guys is that don't normally use once it comes to daily time frame or analyze, don't normally use your trend line like drawing it, finding the support and resistance. As you can check, you can see we touched here, your second touch and your third touch, and you can see what the market did before it went down. So all these support and resistance trend line, you don't need to be drawing it these days because the market has changed. What you normally see those days or last year is not what will occur the early this year. So the ones you need to stick to the market once the market has changed. Once the market has changed, you need to stick to a new age, a new pattern that the market is showing you. So you need to draw you need to find your previous lows and your previous highs. Once analyzing your daily time frame, especially once we are on a downtrend, you need to consider when the market is still going down, if the market is still bearish or bullish. You understand? So we analyze from here. You can see we have this, the last low that the market created, which you draw. This is the last low, which you draw to this extent. Then you leave it. Once you have drawn to this, once the market break this low, retrace a bit, dropped again, then here it becomes your lower low. Here is your lower low, and here is your lower high. At this point is your lower high. Then you draw your lower high. Due to price has created a lower high already, then you draw out your structure line of your lower low, which is here. then the market dropped and created another lower low. Why we consider this a lower low? Because the market created a lower high again. Then this is your last low. Here is your last low. Guys, you can see this is the last low we had on Euro USD. Then the last low we had on Euro USD, and here you can see the market has already broke. Then what are we now looking for? We are looking for a retracement. We are now looking for another new retracement. This is your previous low, lower low. Then we are now looking for a retracement to create another lower high. If the market didn't create a lower high and break this previous lower trend lower high, then that's when we are going bullish. Understand? That's when the market is going bullish. Then what do you see? You can then see a new price. You create a new higher low. Then we can continue going up again, higher high, higher low, higher high. So that is it for your higher time frame structure. You use your trend line to analyze your higher time frame structure to know where the market is, to know where if the market is still going bullish or is still going bearish. Bearish is for sell and bullish is for buy. I take my Fibonacci. This is my previous high. Understand? Then you take your previous high from your swing high. For your downtrend, you take it from your swing high, to your swing low. Your swing high, because here is my swing high and here is my swing low, which is the lower low. Understand? The lower low is your swing low, and you take it from there, from your swing high to your swing low. Once you have taken from your swing high to your swing low, then you are waiting for your retracement. Your retracement should be around 50. Needed your retracement can be 50% discount, because here is the 50% discount. The 50% Fibonacci is your discount price. Then your premium price is your 61.8% of your Fibonacci. So the third one is your supply and demand. You consider your supply and demand, because supply and demand works in every time, both in lower time frame and in higher time frame. It works everywhere. So how do you consider your supply and demand zone? Is that once the market has created your lower low, which broke this lower structure, that's when you'll be looking at for your higher time frame, your higher time frame supply zone. If it's for buy, you're looking at for your higher time frame demand zone, which will help you on your trend, on analyzing your trend. Understand? And this analyze will help you to know what is likely to happen the upper week or the week which we are going into. You understand? Maybe you analyzed on Sunday, then it will help you to analyze, understand, to know what can happen the upper week or the week which you are entering into. You understand? So we can see that we had this zone, which is our supply zone. You can go back to my previous videos. I've uploaded a video about supply and demand zone, how to mark your zones. So I wouldn't like to repeat it again on this video. So we had two zones. That's when you can play your number games. You can use your strategy, your setup. You know which pattern you normally look up for on your lower time frame or your entry zone. That's when you know your age to know where the market will hold. You understand? You can see we had two zones: the supply zone 1, the first supply zone, which is here, and here is the second supply zone. So coincidentally, the market retraced due to the how bearish the market is, how strong the market is. The market retraced at 8.2% of the Fibonacci, which is the first supply zone, and the last one is your origin supply zone, which is the last supply zone that you have. And that last supply zone is at your premium price. It's at your discount price. Your premium price is your 61.8. So that is it for here. So fine, you need to look at for your supply zone. Once the trend is going down, is breaking structures. Once it's breaking lower low structure, you are still bearish. The market is still selling. Don't go and buy when the market is still selling. Understand? Because you can be stopped at. So what do you consider? Once you consider two zones, either at your 50 discount, depending on your strategy which you use, and depending on the setup which you are looking at for on your trade. So you can see we had the number one, which is your first supply zone, and here is your number two, which is your discount price supply zone here. So due to how bearish the market is, the market retraced at your 38.2%. then it didn't reach to your origin order block. Then you need to look at for your pattern, your setup around this zone. Then the market drop to break this lower low structures. That's when you do consider that you are still on bearish trend. Then what do you consider? You consider looking out for a new bearish move. Then you delete your Fibonacci. Then this is our previous low. This is your previous lower high, and here is our previous low. Around this zone is our previous low here. So what do you look at for? You look at for your 50% discount and your supply zone. You can see this is our supply zone. This is our first supply zone that the market created around this zone. Market created this supply zone. This video might be long a little bit due to my explanation. I just want you guys to understand things about how to analyze the higher time frame trend, so that it will get much easier when you are analyzing your higher time frame. So you can see that the market reached at the first order block, which the first order block is between your 50% and your premium price. Understand? Sometimes the market cannot be, because you can't predict all things. You can't just use the probability number games to write the market. You can see on this trend that the market retraced 100%. Understand? It retraced 100%, which is your last origin supply zone before it dropped, and the drop broke this lower low structure that already broke this low. So this is how you analyze. You understand? This is how you analyze everything. Just keep it simple. So forex is all about you knowing your age. You understand? If once you are keeping things simple, that's when it gets more easier for you to analyze, without you like having sleepless nights trying to analyze, trying to fish out things. You understand? So what you do, look at for your discount price. After looking at for your discount price, which is 50%, you look at for your supply zone. Here is your supply zone. This is our first supply zone. Then where is our second supply zone? Our second supply zone is at the top. This is our second supply zone. So what do you expect for the market this week? We expect the market to go up. Understand? All the way up to retrace at our 50 discount price or premium. I have to remove this. Sorry guys. 50% discount or your premium before breaking a new lower low structure. If you like this content, just subscribe to my channel for you to be notified once I post a new video about this forex and supply and demand trading and other things.